You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. There's always something fun to celebrate, or almost always. Every once in a while, we have to search. National Flower Day. That's with the O-U-R, not the type that grows. I guess flour does grow. I eat too much of it, so I grow in the wrong direction. Maybe we'll get rid of some of the flour. We'll see what happens. National Proposal Day. Spring begins today. I don't know. I was outside for a little bit on the way to the studio this morning. It doesn't look like springtime. It still looks rainy and kind of ugly out. Of course, we are in Southern California, so we do get spoiled quite a bit. And of course, having beaten anorexia, National Ravioli Day. Where do you get the best raviolis? Tell me. I'm a foodie, so I'm always looking. Let's take a look and see what's going on in the world today. The Dow Jones Industrial Average up right now, 289 points. S&P 500 is up 22. The NASDAQ is down 7. Oil down at 66.26 per gallon or per barrel of oil. 66.26. Should we look and see if our gas prices our gas prices dropping? Well, I guess.
You know better than that.
Yeah, California, $4.85, $4.85 a gallon.
Ow!
$4.27 over there in Nevada for Josh. Jody's at $3.98. Brittany's at $3.77. And Lori's still over $3 at $3.07 a gallon. Our tremendous underwriter right there in Louisiana. Hawaii, they're paying $4.81. So Hawaii's cheaper for gasoline than we are in California. Can anybody help me understand that?
It is what it is.
Unbelievable, but I guess that's, as they say, it is what it is. That's what the numbers show. Where are we going to go with it? I mean, we don't have much of a choice. But, we've still got a lot of chaos in the world. That's where the whole issue is. Lots of chaos. So we're watching a lot of it. The Credit Suisse taken over by UBS over the weekend. Janet Yellen, in testimony before the Senate, gave us a Kamala Harris answer. I think that's where she must have got that from. A Kamala Harris answer with her word salad when she was asked by an Oklahoma senator, are our deposits safe in a U.S. bank? And if you listen to her commentary, we might share it later on today, but if you listen to her response, it was basically, if we feel like insuring them, we'll insure them. Is that the way the banking system is supposed to work? I don't think so, but that's kind of what we got from Janet Yellen over the, at this hearing, and we don't know. So how do you know where to put your money? The bigger banks will get bigger, the community banks will go under, and we'll continue with systemic risk because of the, craziness. I hate to say it.
Idiot.
Yeah, I mean, it's amazing.
Idiot. Such an
Janet
idiot.
Yellen, I mean, she
Such an idiot.
she's still busy worried about climate change. I know that's the case. And if you look at some of the numbers, which we did this morning, look at some of the numbers of where the banking system for the bank stress tests were. Well, the Treasury Department wasn't listening to the Federal Reserve. It's saying where the stress test was. They're not on the same page. So they're not checking the same way of what's supposed to be going on here. And the banking system ends up having these catastrophes just because we can't get the administration. And I've said this before, I'll say it again. The problem is that when the president picks his cabinet, he was looking for the village people instead of the experts in any area. Just amazing. Pete Buttigieg, transportation secretary. The guy can't even figure out how to get on an airplane. No, let's understand what they do. But we're still having all kinds of problems. 2 years in, they were blaming the last administration. Now, when the president went and changed, dozens of executive orders on the very first day. After 2 years, you don't think they could have corrected the ones that they didn't like going forward way back then? I'm just throwing that out there that, you can't blame somebody else after 2 years because they had every opportunity to change any executive order they wanted changed, and they didn't do it. But that's just neither here nor there. That's where we're stuck at right now. President Biden and the village people running our country. It's just unbelievable. Yes, some of you that are younger may not remember the village people. You can Google it. It's out there. But we're going to go to a break early because I've got a lot of long segments today. What I want to talk to you about today, we've got quite a bit of information we want to give you. We're going to share with you what's going on in the banking system. I'm going to explain all of this to you because I've been getting all kinds of inquiries that home buyers are confused. They don't understand what this all means to them. What does the banking issues mean to a home buyer? We're going to talk about it. I'm going to also start a whole new series for our veterans because we love our veterans. We're going to talk today about the question, is a VA home loan option right for you? We'll talk about that. Pros and cons of debt consolidation, that's on our agenda. What's ahead for home prices in 2023? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at RonIsMyLender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037. RonIsMyLender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs, the products. Do you have a phone? Make the call, 800-306-1990. 800-306-1990. And every day at this time, OBMMI. They provide the most comprehensive, accurate, and timely interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Conforming loans on Friday locked at 6.423. That was down a bit. 30-year jumbo loans locked at 6.464. That was down nice. The 30-year FHA loan locked at 6.324, down a bit. USDA loans down just a little bit. 6.387 was the 30-year lock. And the best loan on the market actually got there. We saw the big issue. We love it when we see these breakouts on this, but we got the 30-year best loan on the market. Veterans, only those that earned it get this. 5.991. That was down for the veteran loan as well. And let's take a look and see what's going on in the markets right now. We're going to take a look and see that the S&P 500, if my screen populates, says it's up 23.63. 10-year Treasury was down a lot earlier in the day, and now it's up 3 basis points. 3.46 is the yield on that one. Mortgage-backed securities are down 22 basis points, means interest rates are up just a little bit as of right now. We'll see what happens throughout the day. And a lot of this just has to do with a lack of clarity. And the wondering, is your money safe? The bottom line here is, and I'll share with you a lot of the data that I get. I went and took a course a couple of years ago. It's a certified mortgage advisor course, and gave a lot of insight as to mortgage-backed securities, interest rate risk, how these bonds all work. And it talks a lot about these different issues. And I get some updates on a regular basis on this. And it just tells us a lot of things that you would think that the village people would understand. But apparently they don't understand some of these things. They need to go through the certified mortgage advisor course as well. Maybe they would understand it. They would understand that when you have the 3-month Treasury and the Fed funds rate, they trade in lockstep. That when one goes up, the other goes up. When one goes down, the other goes down. There's no reason that the Fed was telling us they would hike to 5.1% last year and that they would not change their assumptions on where the 3-month Treasury would go. Of course it's going to go higher. Why is that important? Because that's the number that they were using in the banking stress tests to see that whether it's SVB or Signature Bank or Credit Suisse would have the problems that they're at right now. They should not have seen these problems or they should not have experienced these problems, or should not have been surprised by these problems. The whole issue is where was the regulator? And then you get these people, these Congress people saying, oh, we need more regulation. No, you don't need more regulation. You need to enforce the ones you have. Follow the rules that you set up. It's unbelievable that they just keep doing these things and not realizing the unintended consequences of their actions. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You need to make the call, 800-306-1990, 800-306-1990. So we got a little bit of a workshop for you today. We're going to do this on the banking system. How does it work? Why does it work? Well, what's it supposed to be doing, and what's really happening? So if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you may actually be able to see some of these things going on, what we've got in mind for you right here about the banking system. So let's get on the roll. So how does the banking system work? Basically, here's what it is. You say, or a company deposits $100,000 into the bank. Bank holds $10,000, 10% in their reserves, and they need to make money with the other $90,000. 0.5% on $100,000 if they're giving that to you for your deposit. You put that money into your savings, they're giving you 0.5%. They're paying you $500 a year in interest. 2% on $90,000. That was what they were lending the money out at. That's what they netted out after all the costs when they were either putting it into treasuries or they were lending it to borrowers for home loans. Remember when we had loans, interest rates at 3%? Well, the bank actually, out of that 3%, may say they get 2%. So they're going to make $1,800 a year in interest, which is $1,300 net. Makes sense right there, right? Because that's how they make their money. They keep some, they lend some, and make money. Moving right along. How do the banks make money? They can lend in a safe short-term assets, business loans, car loans, home equity lines of credit. They can invest, example, in mortgage-backed securities. An example, a 3% mortgage rate equals a 2% coupon. Today, that 2% coupon investment is not worth what it was before because interest is higher. Interest rates go up, the bond value drops. It's a mathematical teeter-totter, seesaw, whatever you refer to them as. But under that, you don't have that to show that. Under the hold to maturity is what they called it in Dodd-Frank. You don't have to show that loss against the capital because Dodd-Frank actually said if you hold it to maturity, you're going to get your money back. Banks are not forced then to say, okay, that item that we have on our books at, say, $2 is worth $1. That would mean they'd have to show $1 loss. Not good, because they figure that after that mortgage-backed security matures or is refinanced, home is sold or the bond matures, the bank's going to get all their money back. So they don't have to show that negative equity on their balance sheet under their Tier 1 capital. Now, what happened because of the Fed's reckless actions? Well, remember, the banks loan and invest have a fixed rate of return for a period of time. That's why a 30-year loan, we could say, a year ago or a year and a half ago, 3% was what you were going to pay for it. Banks were going to collect 2% of that. The other goes into the expenses and the servicing companies and whatnot. So say it was that they got a 2% mortgage bond. That's what the bank was holding, was that mortgage bond. But that starts to rise because depositors start to see that they can get more money somewhere else. So they start saying, okay, the net interest margin is not good. It's not what we want. The big banks then realize, okay, the borrower is going to cash in that bond. And when they cash in that bond, their borrower is taking a loss. The bank is taking a loss on that because they're not going to, they can't keep getting the same amount of money. And the borrowers want their money back, right? They want whatever the portion is that they're entitled to. They may not be able to get all of it, but they're going to get a portion of that back. Remember, the bank was only keeping on reserve 10%. That's where that whole issue comes from. So if the bank's only holding 10% and you get a bunch of people wanting their money back, which is what happened with Silicon Valley Bank, well, now they've got to start selling those bonds to give people their cash. Well, okay. Remember, there's a better place to put that money than leaving it there, getting that 0.5%. They're looking and saying, I can go to a U.S. Treasury and get 4% or 3.5%, whatever I told you it was just a little bit ago. Right? So here's the issue. They take their money out of that. Silicon Valley Bank doesn't have enough money. So what are they going to do? They have to start selling the bonds. The bonds show a loss. Now, Silicon Valley Bank had reserves, I think, of about $12 billion, and they would have shown a $15 billion loss. I'll get to that more in a minute. But they had no risk management officer for 8 months, arguably some of the toughest times in the banking industry because the Federal Reserve was increasing interest rates at an unprecedented level, April 29th to January 4th. Gregory Becker, though, the CEO of Silicon Valley Bank, is a board member of the San Francisco Fed. Little conflict of interest there, maybe? But what does he do? Well, he realizes what's going on a couple weeks ago before this happens, and he's selling his stock because he knows about the balance sheet issues. The current chief administrative officer was the CFO for Lehman Brothers. Do you remember Lehman Brothers? The balance sheet showed, again, so another problematic area there. Balance sheet showed $12 billion under the shelter of 2008 ruling, did not count unrealized $15 billion of loss due to held to maturity calculation. If they had mark to market, they were not 12 billion good, they were 3 billion in the red. Think about that. That's, again, another problem. Now, let's take it one step further and bring in the media. Think about that one. So we've got the media here. They're going on the next step. Okay, let's think about this one. February 8th, Wall Street is mistakenly concerned about SVB. Fears are not justified. This is on Cramer, the Jim Cramer show on CNBC. And I quote, Wall Street is mistakenly concerned about SVB. Fears are not justified. He's saying the stock is still cheap. A $320 share with room to run is what Cramer said. $320 a share, room to run. So Cramer brings this whole thing out into the limelight. That's where the issue comes up with this. Unbelievable. Savvy investors take notice of what's going on here, and they do some digging, and they realize Cramer doesn't know what he's talking about. Think about that. So they realize this. They start shorting the stock. Now, what does that mean? Let's before actually I got a little ahead of myself there. So savvy investors notice the cracks in the Silicon Valley Bank. They realize there's something called duration mismatch. It's that hidden $15 billion in unrealized losses. The investors start shorting the stock. That's drawing more attention to it. What does shorting the stock means? Well, investors not only don't they listen to Cramer, they do the exact opposite. They start going out and betting that the stock is going to go south, that the stock is going to go down. That's where the investors are saying. So they get a run on the stock price. Investors now notice that the remaining $13 billion in unrealized loss on the remaining $60 billion in agency securities. That tells the investors the bank is bankrupt. The bank is insolvent. That's the issue right there. So the short sellers, they smell blood. The stock craters. Depositors warned to get out. See that? When the stock starts going down like that, the depositors say, you know something? This is a bankrupt company. I want my money before they go bankrupt. Remember at this point in time, that the FDIC was saying Money's insured to $250,000. But there's payroll accounts there. Some of the payroll accounts have significantly more than $250,000 in them. 93% of the money that's held at Silicon Valley Bank, 93% is outside the FDIC insurance. Think about that part of it. That's where the problem is. So with that being outside of that insurance, people are starting to pull money out. The number I heard, I may or may not be correct, is $500,000 or $500,000 per second was being pulled out of the bank. $500,000 per second being pulled out of the bank. Because remember, in prior banking issues, whenever we had a bank run, it's called a run on the bank, when this happened, people had to line up to get their money. Do you have to line up to get your money at a bank now? No. All you have to do is go online and you can actually get your money, right? And all at this same time, Janet Yellen, she's saying the banking sector is resilient. And on Sunday, this is a week ago, she says there's no shot at a bailout. Thanks, Janet Yellen. On Monday, the Fed steps in. The Fed and the FDIC protects depositors, thank goodness. Bank Term Funding Program, BTFP, allows banks to trade underwater securities, and the Fed will buy them at face value. So the Federal Reserve is buying them. The Federal Reserve went from, and I don't have the exact numbers in front of me, but they went from basically the week before the bailout or this run on the bank, they had about $6 billion requested at the Fed discount window. This particular week, which was last week, over $150 billion. Almost, what is that, 25 times the amount? So we got a bailout there. You can call it whatever you want, but it is a bailout. What does this mean for us? Well, we got a flight to safety. People are saying, okay, I'm going to get my money out of any of these banks that are smaller banks that we have to worry about. The institutions have to rethink their reckless policy. Now we're going to another version of quantitative easing. So the Federal Reserve says they're going to raise rates, yet which is slowing inflation, but they're going to buy the bonds, which helps increase inflation. And it's all because they wouldn't look at what's plain and simple. We've been talking about this. It's the importance of the inverted yield curve. We've been talking that it always causes a recession. Nothing has changed. These issues are all deflationary. So the banking issues, why is that deflationary? Well, the reason is because the banks are starting to say, you know something, if we have to be giving people their money back, we don't know what we have to lend out. So they start making their guidelines tighter on the lending side. Maybe not as much for mortgages because we've got Freddie Mac and Fannie Mae, but it might on some of the non-qualified mortgages where the bank statement, we may see some of those getting a little bit tighter. But because there's less money going into the system, well, that helps bring down the inflation rate. But the Federal Reserve keeps looking backwards instead of trying to project and forecast what's happening in the future. So I hope that helps you understand a little bit where we're at with this. The bottom line with all of this is that we're going to have some issues here. Because of all of this, there's going to be a flight to safety. What does a flight to safety mean? That's why the U.S. 10-year Treasury earlier this morning had dropped so far. It's because there were folks out there looking and saying, you know something? If we don't understand what the banking system has to offer, if we don't know that our money is going to be safe, what are we going to do with our money? Pretty simple. We're going to put it into what's the idea generally accepted as the safest investment in the market. That would be U.S. Treasuries. And that's why we saw the yield this morning on the U.S. Treasuries had jumped so much. It was so much further than what we had seen. I mean, right now I told you that the bond is up 4 basis points. It is at I don't know why my chart won't populate right here so I can actually give you the exact number here. But right now we're looking at the bond at 3.466. Earlier today it was at 3.39. So it was down significantly lower than where we are seeing it right now. And that all has to do with that flight to safety. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, still got a lot to go over with you. We're going to give you what's ahead for home prices 2023, debt consolidation, understanding the pros and cons, and we will get to that new VA program that we're going to start. It's going to be a long series. Is the VA home loan option right for you? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Hey, we're going to be coming out with something brand new. It'll probably be available in the next couple of days. It's basically how do you get mortgage ready? And it's part of the Home Scout suite of products. How do you get mortgage ready? You'll be able to look at your budgeting. You'll be able to look at your credit scores. You'll be able to look at how to save for a down payment. We're going to call it rsrmoney.com. rsrmoney.com. We should have that available for you probably by the time you're watching this video or watching or listening to this on ABC News and Talk AM 1490 on the video feed. So what's ahead for home prices in 2023 over the past year? Home prices have been a widely debated topic. Some have said we'll see a massive drop in prices and that this could be a repeat of 2008, which hasn't happened. Others have forecasted a real estate market that could see slight appreciation or depreciation, depending on the area of the country. And as we get closer to the spring real estate market, experts are continuing to forecast what they believe will happen with home prices this year and beyond. Selma Hepp, chief economist at CoreLogic, says, quote, while 2023 kicked off on a more optimistic note for the U.S. housing market, recent mortgage rate volatility highlights how much uncertainty remains. Nevertheless, the continued shortage of for-sale homes is likely to keep price declines modest, which are projected to go out at 3% peak to trough, unquote. Additionally, every quarter, Pulseonomics surveys a panel of over 100 economists, investment strategists, and housing market analysts regarding their 5-year expectations for future home prices in the United States. Here's what they said most recently. The estimated home price performance, and I love looking at home price expectation survey. This is where this comes from. This is where the data that we're sharing with you comes from. And if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're able to see this. So home price expectation survey says 2023, they expect the prices of homes to drop 1.61%. I wish I had a yawning button on my soundboard because it's not a whole lot. 2024, they're saying go up 1.9%. So it balances out. 2025 up 3.57. 2026 up 4.25. And 2027 up 4.44. Those are national numbers. So that's what, 11, 12%, 13% over the next 5 years. Given this information, what experts are saying about home prices, the question you might be asking is, should I buy a home this spring? Here are 3 reasons you should consider making a move. Number 1, buying a home helps you escape the cycle of rising rents. Over the past several decades, the median price of rent has risen consistently. The bottom line is, rent is going up. Home ownership is a hedge against inflation. A key advantage of home ownership is that it's one of the best hedges against inflation. When you buy a home with a fixed rate mortgage, you secure your housing payment so it won't go up like it would if you rent. Number 3, home ownership is a powerful wealth building tool. The average net worth of a homeowner is $255,000 compared to $6,300 for a renter. Experts are projecting slight price depreciation in the housing market this year, followed by steady appreciation. Given that, you may be wondering if you should move ahead with buying a home this spring. The decision to purchase a home is best made when you do it knowing all the facts and have experts on your side. Give us a call at 800-306-1990, 800-306-1990. And remember, we don't give investment advice on Ron Siegel Radio. You got to talk to your expert partners on that. We can put you in touch with all sorts of expert partners. But the bottom line here is a lot of benefits to buying a house right now. And just think about this. If interest rates drop dramatically, well, then what you may find out is that, well, we've got some time on our hands, that you're able to, you'll be, actually, we don't have time on it. It's the other way around. We don't have the time. If interest rates drop dramatically, you may be out of time. And the rates, the appreciation might go up because we're not getting more people putting properties for sale. What's happening is we've got a balanced market. The sellers aren't selling because they don't want to. They don't want to get rid of that 2, 3, 3.5% loan rate, and go into something that's 6.5 or 7. But if interest rates come down to 5.5 or 5, you got a whole different story on your hands. I'm just throwing that out there for you. Be careful. Watch what's going on. That's the Real-Time Real Estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has these solutions for you. Go there, get registered, get on a plan to save money. Credit Sanitizer can help you with that. Debt consolidation is one of the areas, though, that you may want to look at, understanding the pros and cons. Debt can be overwhelming, especially if you have multiple loans or credit cards with high interest rates, and you know they've been going up. Debt consolidation is an option that can simplify the repayment process and lower your overall interest rate. However, it's essential to weigh the pros and cons before making any decisions. First thing you need to do before we get into the pros and cons, send us a schedule with your debts. Let us know how much, who it's to, how long, what the interest rate is, and what your payment is. Or you can just send the statement. You can redact the credit card numbers. I don't care. Send them to RJ at RonSiegelRadio.com, RJ at RonSiegelRadio.com. I really don't care what the account numbers are, but what we want to know is, what is your blended household interest rate? What is your blended household interest? So yeah, you may have a 3% mortgage or a 3.5% mortgage, but when we blend in everything else, well, it may not be a 3.5%. You may be looking at something significantly different. You may be looking at something that is, a whole world off. So we just want to make sure that you're understanding these things, that, maybe you've got a blended household interest rate of 7.5 or 8 when you put in student loans and car payments and credit cards and unsecured loans. Those things all go into it. So let's chat about those, but let's understand the pros and cons of debt consolidation. Number one, there's a simplified repayment process. With debt consolidation, you can combine multiple debts into one loan, making it easier to manage and keep track of your payments. Instead of having to make multiple payments to different creditors, you only have to make one payment each month. Number two, generally you can see lower interest rates. Debt consolidation can lower your overall interest rate, which can save you money in the long run. High interest rates on credit cards and other loans can make it challenging to pay off your debts, but with a lower interest rate, you can pay off your debts faster and save money on interest. Number three, improved credit scores. Consolidating your debts can also help improve your credit scores. When you consolidate your debts, you're essentially paying off all of your outstanding debts, which can have a positive impact on your credit utilization rate, which is roughly 30% of your score. Number four, in this high inflation environment that we're in, when it's costing you more money to do everything, when you consolidate all of this, basically what you're doing is you're putting everything into one loan. And when you put it all into the one home loan, it's amortizing over 30 years. The interest rate is lower, so you'll save on your payments. They say, Ron, I might be taking my 3-year, 5-year car payment, putting it into a 30-year loan. Yes, you are. But what happens if you take and increase the payment on that home loan and pay off principal quicker? You will save money over the long run. The downside of debt consolidation. Number one, longer repayment period. While debt consolidation can simplify your payment process, it can also extend the repayment period. Depending on the terms of your new loan, you may end up paying more interest over time, but maybe you're paying smaller payments. Number two, risk of further debt. Consolidating your debts can provide temporary relief, but it's important to address the root cause of your debt. Without changing your spending habits, you may end up accumulating more debt and finding yourself in a worse situation. Number three, fees and charges. Debt consolidation can come with fees and charges such as balance transfer fees and origination fees. These fees can add up, so it's important to factor them into your decision-making process. Bottom line, debt consolidation can be a useful tool for managing your debts and getting your finances back on track. However, it's crucial to understand the pros and cons before making any decisions. Consider your individual financial situation and goals, and seek advice from a financial professional if needed. Remember, debt consolidation is not a one-size-fits-all solution, and it's important to weigh the potential benefits against the potential drawbacks. Whether you're considering debt consolidation or exploring other options, we are here to support you. Visit ronsiegelradio.com for more information and resources. If you're struggling with debt and other financial issues, don't hesitate to seek help. I am a renowned financial expert and radio show host who provides valuable insights and advice on all things finance. I am your consumer advocate. Visit ronsiegelradio.com to learn more about the services and schedule a consultation today. Take control of your finances and start building a brighter future. That is the Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? creditsanitizer.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to chat. We're going to start our series on the VA loan. Week 1, is the VA home loan option right for you? We're going to talk about that. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. A workshop. Yeah, we're doing this for our veterans. We love our veterans. And we're going to be doing a series on the VA home loan, VA benefits. So we're going to talk a lot about those over the days and weeks to come. So let's get into it. Is the VA home loan option right for you? If you're a military service member, veteran, or a qualifying spouse, this is for you. We're exploring the VA home loan option and whether it's the right choice for your needs. So what makes VA home loan special? For starters, they're backed by the U.S. Department of Veterans Affairs, making them a unique opportunity for eligible borrowers. Let's dive into some of the key features. Number 1, no down payment required. One of the biggest perks is that you can buy a home without a down payment as long as the sale price does not exceed the appraised value. Say goodbye to 20% down payments you'd see with conventional loans. Number 2, no private mortgage insurance. Unlike other loans, you won't need to pay PMI on a VA loan. This can save you hundreds of dollars each month. Number 3, Lower interest rates. The VA guarantee often leads to lower interest rates compared to conventional loans, making your monthly payments more affordable. Number 4, relaxed credit requirements. The VA does not set a minimum credit score, giving borrowers with lower scores a chance at home ownership. Lenders, though, may have their own credit requirements. There may be what they call overlays, where the lenders will say, hey, you got to have a certain amount, a certain credit score in order to qualify. So let's talk about, those are the features. Now let's talk about some of the benefits, or those are the benefits. Now let's talk about some of the features that the home loans can impact your life. Number 5, building equity. With no down payment and lower interest rates, you can start building equity in your home sooner. This can be a significant financial advantage in the long run. Number 6, easier qualification. Again, we talk about this. Relaxed credit requirements make it easier for eligible borrowers to qualify for a VA loan compared to other types of loans. You can reuse the benefit. Did you know you can use your VA loan benefit over and over again? That's true. You can use it again as long as you pay off your previous loan or sell the property. Or in some instances, you can have multiple VA loans. We can get into that. We're not going to get into the real deep issues. You can call us for that information, 800-306-1990. Also, the VA offers financial counseling and assistance to borrowers facing temporary financial difficulties. We don't want foreclosures. The VA doesn't want foreclosures. So, is the VA home loan right for you? If you're eligible, it could be a fantastic option to achieve your dream of home ownership. To find out more, well, you can go to the U.S. Department of Veterans Affairs website or give us a call. Our team, we are VA-approved lenders. Just for you, that's a little bit of information on that part of it. That is our first workshop on the VA loan. If you want more information on this, give me a call at 800-306-1990, 800-306-1990. So just a bit of the information there. We're going to dive into this deep. Like I think we've got about, 40 or 50 weeks worth of content for you. But don't wait for all the content. That's for those people that think they need to wait. They're not ready yet. Those folks should just go to rsrmoney.com, and get mortgage ready. Get your house in order. You don't have to do a lot of the things that we talk about in RSR Money. You need to do the budgeting, but you're not going to need to deal with saving for a down payment. Yeah, it could help you if you have a higher credit score, so that won't hurt you, but let us chat about it. You won't believe how many people there are that we find all the time that say, well, we're not ready to do this yet. Well, the answer is they are ready. They just don't know it. And until they go through the process with us, and again, you can get started at rsrmoney.com. You can go and just fill out an application, sltloanapp.com. That's our Siegel lending team, sltloanapp.com. In fact, I should probably get just rsrloanapp.com, but we don't have that one right yet. But that's, just get started. And we've come out every quarter. We actually put out some buyer's guides and seller's guides. We just came out with the home buyer's guide, rsrhbg.com, rsrhbg.com. It's a great tool to help you get it, to start looking at what's going on in the world for buyers. And when you're ready, or at any time, and anybody, not just for our veterans, rsrccpayment.com, rsrccpayment.com. That's going to show you how to pay your credit card bills correctly. It'll tell you, and I know I have people all the time say, well, Ron, I get my bill and I pay it off in full. Well, if you get your bill and then pay it off in full, you're one of the 95% who are not paying your credit card bill correctly for FICO scoring purposes. That is not the right way to do it. Take a look at rsrcredittips.com, rsrcredittips.com. That'll just give you a few different tools for increasing your credit score. And I'll also tell you rsrcreditmistakes.com, rsrcreditmistakes.com. That'll take you the other direction as well. So giving you a lot of information today about all these different issues. We talked in the prior segment about debt consolidation. I forgot to tell you. rsrnodebt.com, rsrnodebt.com is a quick little video where we've shown you our form where you can actually put all your data right in there, and that helps that whole issue as well. rsrnodebt.com. And we've got rsrrapidpayoff.com, rsrrapidpayoff.com. Giving away a lot of stuff today, a lot of stuff to give away. But hey, that's because we're looking out for you. That's why you tune in to Ron Siegel Radio. Always looking out for you. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.